What are some terms and conditions that we need to be aware of when it comes to our life insurance? Well, you may have heard of something called living benefits. Living benefits are part of your life insurance that you can access while you're still alive. And that's a great thing, especially when you know you want to make sure your family is protected. God forbid something should happen. If you can take care of that while you're still here, that's a burden you can take off of your family's plate. Wherein lies the problem is where there's terms and conditions that we're uncertain of how it will actually impact us and our families when we need that help the most. I want to start with a term referred to as up to. So if you have, say, $100,000 worth of life insurance and you have the living benefit option of accessing up to 90% of your benefit plan, knowing you can access 90% is great because then you know that you can access up to $90,000. But what about that term up to, and what does it mean for you and your family when you need that benefit the most? Well, in short, based on the terms and conditions of your policy, they may only issue out a very small portion of what you thought you had coming to you. Make sure you have an insurance agent that's willing to make sure you have the best plan for you. The next thing I want to talk about is no health questions. That's a term you really want to be leery of if you're relatively healthy. Why? Because policies that have no health questions are policies that are designed for people insurance companies would consider to be high risk. So those policies are typically guaranteed issue. And when an individual doesn't have to answer any health questions, it's because the insurance company is assuming you already know that you're too sick to qualify for traditional coverage. Now, you may have already been told by an insurance agent that you don't qualify for traditional coverage, but that doesn't mean that's how every insurance company is going to feel. Make sure you have an insurance agent that's willing to do the legwork so you have the best policy fit for you and your family. For example, let's say you have diabetes. That's a very common medical condition, but depending on when you were diagnosed, some carriers may decline you or give you a waiting period based on that condition. Not every carrier is going to feel that way because they all are willing to carry different amounts of risks depending on their individual statistics. Some are more lenient on diabetes. Some are more lenient on smoker status. Some are more lenient whenever it comes to a combination of high blood pressure, high cholesterol, a diagnosis of cancer. So the point is, without being able to disclose how each insurance company is different, is understanding that they are, and you need to have a life insurance agent that's willing to make sure you have the best plan for you. Another term to be mindful of is modified. If you have been discussing a life insurance option and then all of a sudden when you get approved, they say, congratulations, you have been approved for our modified benefit option. The first question you need to ask is, what's been modified? Because guys, it doesn't mean it's not the best policy for you based on what your medical conditions are. It may actually be the best approval that you can get, but you don't know until you ask. And a lot of times, just like whenever I mentioned in that previous scenario where one insurance company may provide you with a modified benefit option, the other company may be willing to give you day one coverage. This is something that you really need to explore to make sure that your coverage goes into effect as soon as possible, especially considering that you're paying right away. The next term I want to go over is something referred to as a convertible plan. Now, this is not a bad thing, guys, but you do need to understand how it works. If someone tells you that you have a convertible plan, then that means you're going to pay a lot less up front potentially. And then if you want to transfer it into a more permanent type of policy later on, because it's convertible, you have the ability to do that. So you're not paying more until later. The reason it's important to note that you have a convertible plan is so that you mark a day in your calendar on when you should take action to make that transition. What I see happen most commonly is people are very quick to jump on a convertible plan knowing they're going to pay less upfront, and they have every intention of changing that policy in the future to something permanent, but perhaps they don't get around to it, or they don't even know when is the last day they have to take action. Make sure that day is marked in your calendar so that you know to call the insurance company before they no longer give you the option to make it convertible. Otherwise, you could end up in a situation to where your policy remains temporary and you no longer have the option to put that permanent feature in place, which could leave your family in a bind if by the time you realize it, you're either no longer insurable or now you're older and you have health issues, and that could make you spend a lot of extra money in the future, and it's something to look out for. Thanks for listening to quick tips on how to be the most informed consumer that you can when it comes to one of the most important things that you can do for your family. Let me know if you have any questions. If so, drop them in the comments. I'm always here to help. Take care, and remember, your life, your insurance.